If we think about the profile of most activists looking at the UK, they are invariably hedge funds. If we see significant movements over a short period of time into known trading accounts on the register, that gives a clue of activity, but it also could be the result of a trading by long, short or other hedge fund strategies. We also follow chatter amongst the event-driven investment community to see which companies are being talked about as new ideas. Activists are drawn to companies that can release cash from their balance sheet through asset sales or increasing leverage, carry out buybacks, or companies that have scope to reduce operating costs. So if a company checks the box on all of these signs, it's usually a good indicator that an activist is circling. Companies with market caps between $1 billion and $10 billion are most at risk. This is the sweet spot for activists, big enough to move the needle, but small enough to build a significant stake without betting the farm. For most activists, a public campaign is the last resort, where all other attempts at effecting change have been fruitless. Activists generally start engaging privately with key shareholders, sharing ideas and thoughts and looking to gain traction with active managers. If they feel that conditions are favourable, they might first publish an open letter to the board or publish their thesis on their website and promote readership through the media. In rare cases, we've seen activists using the AGM as a platform to gauge their support by opposing a core resolution, for example, remuneration report or director re-elections. A good defence strategy should always start with a good look in the mirror. Activists have normally done thousands of hours of research on a company before they commence a public campaign. Often, there are many parts of their thesis that are entirely sensible, and that should be considered carefully by the board. It goes a long way to showing the market that they're taking activist concerns and demands seriously. Even a small concession early on would show reasonableness to avoid the pain of a public battle. After that, the key is about showing the market that the company's management, their strategy and their plan is the best for shareholders. The burden of proof is on the activist to make the case for change, but it's equally as important for the company to show the market that its plan is better. Management and the board should be visible and available for shareholders, media, customers, unions and employees. It's an enormous time commitment away from running the business, but that's why it's easier if the burden is shared among the board and the executive committee. By dedicating effort and time into stakeholders, not just the top 10 shareholders, having frank, open and honest conversations about the future of the company, they'll be in a much better position of trust in the market. The issues a company faces during an activist defense are interconnected issues. Financial performance, governance, strategic direction are all issues that stakeholders care about, and these stakeholders are influenced by each other's perceptions. So it makes complete sense that your advisory bench brings interconnected disciplines of proxy, CMI, governance and stratcoms, all within one team that can solve challenges better than multiple individual advisors. That intense period of a public fight requires those solutions to be a minimum of high quality and high speed, and that's the Sodali advantage.